Alrighty, so this is the blog for Monday the 6th of August, day 41 of 65, so the start of the 9th week of this 13-week compound effect challenge, making forward progress every day and applying my edge and method, and just really focusing on the small things and sticking to the method, applying the edge day in, day out, building fantastic risk models around the parameters of that, and really focusing on the fact that this is about a model and going into the marketplace and taking the trades when the model say to take the trade, as opposed to me as an individual taking those trades. Trading system. So again, just really focusing on the fact that there's predetermined areas in the market, and that's sort of the marker for where I take a trade. That's the concept of this entire system or method. The first one, continuation trades or the momentum trades, just like the basic 5-minute trades. We're looking for a continuation of the direction. You're just using key levels in the marketplace. The thing about today is we couldn't move enough to get to key levels, so there's never any thought of taking in any of those sort of trades. Breaking highs and breaking lows, the same sort of thing, looking for the market to get above key areas or key price areas that are determined in that immediate area. Not that I determine. Again, it's a systematic approach. There's a few things that I use to establish it. I did have one of those areas today which failed, but I'll go through that area. And then, of course, the reversal or directional strategies, where looking for a new change of direction or momentum, and looking for the market to form a pivot point, and once the market starts to break that pivot, getting continuation and pushing through with that new direction. So on the daily chart, we're certainly up around some areas putting some pressure on these higher highs up here. These markets haven't been this high for many years, so what's going to happen, it's going to really slow this market down. Also the fact that we're starting this US and European summer break typically will slow the markets down. It doesn't always happen that way. Last year the market just kept on rocking and rolling straight through that summer break, but this time it looks like it's going to start to slow down a bit. But I don't want to put my mind in a box saying that this market's not going to perform. Just keep on turning up and looking for the setups, but being aware that style markets now, so I certainly switched to a little bit more of a method or mindset where I realise that markets aren't potentially pushing through it as great. So look for a few areas just to get a little bit more confirmation, and I'll talk about in this one particular area that I took today that failed. 15-minute charts. So this is today's action here. As we're going through the day, I could see this trend line starting to form. It's not a really confirmed trend line yet, because it's only been touched twice through here. But you can see they nearly tried to touch it here, came down. They did hang around it here. So it looks like the market is sort of reacting to this area. Interesting to see where it comes up here now, what it does when it comes back and gets towards this trend line. See if the markets want to react and push down lower off that. And certainly if that's the case, looking for possibly the market have a bit of a sell-off. But we'll keep an eye on that anyway. But definitely through this day here, the market was more on the upside. Alright, so here we go. A few areas that I've marked out. So this, actually, first of all, key support resistance areas based on the 60-minute charts I've established for the week. So here we've got two levels at the moment, 91, 87. Yeah, and just once the market starts to come down and have a look around those areas, potentially those areas can move a tick or two. Just seeing how the market reacts, but just knowing that these are fairly key levels. Markets have made significant turns at these points in previous days or previous weeks. On the upside, the areas are a bit limited, key levels, just because obviously we're hitting new highs and things like that. But at the moment, you can see these two levels. We never got down and got anywhere near those. So of course, as far as 5-minute sells or 5-minute buys, I'm not really looking until we do get rounded. And I'm taking these areas in predetermined areas of the market, which I know that they have reacted to that area before and can rely on the market using that as support or resistance, most times as far as a percentage basis. Here's the breakout box or the order box. So you can see that the pre-market was kind of contained within this range starting up. So a directional breakout, looking for the market to push one way or another through that box with the support of the other markets, and then use that as either support off the top of it or resistance off the bottom of it. It's an area which I'm really looking forward to seeing how it performs in quieter markets. It's certainly something that, looking at the first trend, I know a lot of people look at the first trend and look at first power point and power fade, things like that. And that's there's many ways to approach it, and there's certainly not a right or wrong way. But for me, I like this way because I'm not relying on a power point or a power fade, but just relying on once the market actually picks a direction, going with it. And many times the market will make a false move, once or maybe even twice. For example, on the downside here, we started breaking down through the bottom side of this box. It only happened quite quickly, but to start off with, the pressure was certainly on the downside, but wasn't intending to sell because the other markets weren't going with the ES, especially the Dow Jones. It just was still, it had green candles all over it. So obviously the ES is making a bit of a fake move there. Then it turned around and pushed to the upside, and all the other markets started going together. So basically, any markets were slightly trying to head down, they were turning the upside, and then something like the Dow Jones that was already up was kept on pushing up, and then the Russell we can see here. By the time I'm looking to try and get a buy, look, the Russell was just streaking away on the upside. So certainly there was momentum, and the market won head there and head on the upside. So 93 was the area, just to bring it onto the 1 minute chart. So this is what I'm looking at here. Here's the top of this box, so I'm looking to use it as support. So obviously we start getting through it here. Once the market really start pushing through here, normally look for it to push 4 ticks. But if there's real momentum, I'm not going to wait around too long. I actually put the order on. You can see it's popped back here and flash on the order. Just didn't get me in there, unfortunately. It's pushed back up. I'm still going to let the order go. So as soon as it goes 4 ticks, I'm just looking for it not to go too far past, but eventually come back and use that as a support level. Again, it came within 1 tick of the order and then took off. So by then I'm taking the order off. Technically it did come here and get it, but I'm not looking to leave it on for this long because eventually it's had a couple of goes, and by the time it comes back this, say third time, chances are it might just start to get some momentum in the other way. If it's going to go, it's going to usually go the first couple of times. So I'm not going to leave the order on there all day. So therefore, the rules are take the order off by there. So unfortunately, it goes down just as a missed trade. So the next area here, this is looking for a breakout trade. So setting up on the 5 minute chart, we're pushing up. Certainly thought this markets had some momentum on the upside. I thought this level here of 93 was holding quite well. The predictive average starts swinging back to the upside. So as this market's approaching back to its highs, even though this is not a major trend, but still enough of a movement up, it's certainly indicating that the market's heading up. So looking at the pullback and to break these highs and get a continuation to the upside. So again, break it down on the 1 minute chart. This is the area here where we start pulling back and looking to go up higher. So I'm looking around this 94.50. I've already predetermined this level because if you look through the markets, that's an area the market keeps on reacting to. You can see I look for what I call a spike candle. So this one here, it sort of marks the line, temporarily just comes back. It sort of makes a little bit of a peak there. It's not obvious, but it's something that I notice, and within what I'm looking for, it's something that stands out for me. The market just deals around a bit there. You can see it's getting above it and holding underneath it. Hits the head off it here, so that's a real distinct move there, showing that that's the area. Then once we get through it and looking to use that as support, so buy it here and head to the upside, and hopefully get some continuation there. If it wants to stop me out, then it's actually got to break through, and that's that support level, and push on down. So unfortunately, it went about 4 or 5 ticks. So I didn't quite get to getting some contracts out, but then it's just really dealt sideways here. Using at this stage, I reduced my stop loss to 1 tick below this area here, so it was a 4 tick stop. Many times it looked like I was going to get it, and then a couple of times here it looked like I was going to go, and I just went from the situation, it was like, okay, it's going to get stopped out. Oh no, here it's going to go, and it was just really kind of toing and froing with me there, and then eventually it stopped out. But all through this level, just the strength of a model is if you can stick to your guns. And even though times through here I just thought this is a good chance of being stopped out, at the end of the day the stop was set. If it wanted to come down, it was going to stop me out, so be it. It could have quite easily popped up and went to the upside as well, and with a risk half the size of profit targets, when you start creating risk models and understanding your percentages and things like that, you can just have a little bit of faith and realise that this is the right area to be in. They're not all going to work, of course, but I'm just going to stick to what I know and take the area and stay within the area. And you're not tempted to all of a sudden just bail out because you want to save a tick or two. in the past, I'm speaking from experience, obviously in the past. That's sort of the mindset I'd approach the markets with. And it's when you start creating risk models and knowing a little bit more of the perimeters of your system and understanding the figures. That's when you can sit there with a lot more confidence and just go, it really doesn't matter what happens because this is the model that's in control, not me, and I'm not the one that's having to be the magic. So it's a good feeling when it starts getting like that. On the downside here, so what's as far as a reversal setup, basically I'm looking for the market to change directions after seeing a specific area fail. Either 5-minute buy, 5-minute 5-minute buy sell situation, or a 5-minute momentum, or 5-minute fade, or a breakout trade. Any sort of trade where I'm potential of those three trades, if they fail, and then they start putting pressure on them on the pivot, on the opposite direction, looking to take the reversal in the opposite direction. So here's basically a swing low here. So this is where the market's pushed up from and try to break up higher. They just couldn't do it. So if they come back and put some pressure on this point here, I believe that more times than not, the market will once it breaks it, get a continuation because it's they're normally areas of great momentum because they couldn't go the direction they wanted to. So then things start to shift all of a sudden when everything starts applying pressure in the opposite direction. Obviously, people that are looking upside here, they're going to place stops and things like that. Just one tick below this level. So what you're doing is you're going on a bit of a stop hunt. That's the theory of it. Is the upside doesn't work. So and you sell here as all these people are trying to buy, they start bailing out and it starts hitting their sell orders because they want to get out of the trade. And you see a momentum of the sellers there because all these sell orders are getting filled, and you're in a great area of a nice little pocket there of sellers within this market. So that's the theory. So as long I always try to think in that kind of way. Base my trades on logical trading areas, and for me that works really well. Something that really also needs to come with the area is that it needs to break a pivot, but also needs all the other markets breaking that same sort of area as well, just to kind of rule out any sort of false moves from the ES. In this particular case, it was a bit of a false move. Sorry about that. Just let me get that back. It proved to be a bit of a false move. At the time, it's always in hindsight you look at these things and I go over it and I don't try to change the situation. Go, well, that shouldn't have been. I shouldn't have taken that and sort of hit myself on the hand for that. But I know that looking back over it, so for example, where is it? Let me bring it up. I think it was the Nasdaq. Just wasn't participating on the downside at all. If I can just quickly bring it up. So basically, here's the pivot point on the Nasdaq, and then all the other markets are trying to break down. And as the other markets were, and this is where I was taking the trade. So you can see the Nasdaq's moved a long way up from that breakout point. Okay, and so really I didn't have the other market support that particular situation. So, but the Russell was pushing down. So I know, the way I got to look at it is, if it had been a trade that worked and happened to get some momentum and went for 8 ticks or 10 ticks, I would have thought everything's fine. I would have disregarded the Nasdaq. But now the trade failed. I'm looking for reasons for it to fail, sort of thing. So not necessarily that's the best way to approach it. Like I said before, it really should be based on your model. But at the end of the day, I think my rules is to really rely on the other markets. In that particular case, I didn't have all the other markets supporting me, but that's just the process I go through when I look at some of these trades. What I really should have done, this is what I talked about before. When it's a slower market, you might have a few different ways to approach the market. So if there's real momentum or these markets really moving, obviously this is quite a slow market. If I'm a little bit more aggressive, or the way I approach this is, as soon as it breaks, right on the pivot or one tick below, I actually take a trade then. And I did that because I saw the Russell starting to move down. If the other markets aren't all in my favour, which in this case it wasn't, I look for a confirmation entry, which means it pushes down, pops back up in the range, and then if it wants to come a second time and break this pivot, go for it then. So as you can see, it popped back up and then it tried to go lower but just didn't get there, and then it started pushing up, and then that's when all the other markets started pushing up as well. So my confirmation entry there was no fill there, but that's just want to give you a little bit of an example of what I mean by, when there's slow markets, not necessarily completely changing your trading system, just adding in a few maybe little extra tweaks here and there to make it more appropriate for the current trading conditions. But anyway, I don't want to harp on the fact that there's been 2 losers for the day. Like I said, it's based on a model and very much has some faith and belief in this model, and there's certainly trading opportunity there, and there was a trading opportunity there, even though I could have executed a little bit better. But overall, 2 losses to start off the week, and unfortunately, as far as taking out contracts at the 1R level, 5 ticks, neither trades got there as well. So in a bit of a situation where 2 losses and both of them pretty much went against me and didn't really go in my direction. So early days, and look to make that back during the week. Righto, so that's a wrap up for Monday. Speak to Tuesday.